Hi, I'm Kara Murphy, and this is Money with Murphy. Gold recently reached an all-time high, up over 16% this year, compared to the S&P 500, up just 5%. What's driving this recent run-up, and more importantly, does gold belong in your portfolio? Gold has long been highly sought after, from Cleopatra's attempts to use alchemy to turn lead into gold, or California's gold rush that drew hundreds of thousands of fortune seekers. Today, there's no need to pan for the precious metal. Buyers can find gold coins in vending machines in Korea, or ATMs in Abu Dhabi, or even the aisles of Costco. Unlike other precious metals, such as silver and platinum, gold actually has very limited practical uses. Most of it is used in either jewelry or currency. So why the sudden interest? The question's actually harder to answer than you might guess. Some combination of an expected increase in inflation, higher government borrowing, and rising geopolitical risks are likely to blame, though each of these issues on its own has been an unreliable driver of gold prices. Let's take inflation, for instance. Prices continue to rise today at a pace higher than the Federal Reserve's target, driving some investors to hunt for an asset that can help protect their portfolios should inflation remain pernicious. But when we look at other periods of rising inflation, gold has a spotty track record. So, for instance, in 2019, consumer price inflation went from 1.9% to 2.3%, a modest change, while gold in that same time rose by over 20%. Then in 2021, inflation rose from 1.4% to an eye-popping 7%, while gold actually declined by 4%. There may be another culprit for gold's recent rise: central bank buying. For much of the 1990s and early 2000s, central banks around the world were actually net sellers of gold. Then beginning in 2010, in the aftermath of the global financial crisis, those banks began buying the precious metal. Then in the last 2 calendar years, central banks in aggregate bought more than 2,000 tons, the most ever on an annual basis. The majority of these purchases came from emerging market countries, such as China, Singapore, Poland, and the Czech Republic. According to the Central Bank Gold Survey, policymakers were attracted to the metal because of its ability to hold up in times of crisis and retain value. So the more important question then is, does gold belong in your portfolio? As I mentioned earlier, gold has few practical uses, either to look nice or serve as another form of money. While gold has had periods of outperforming, these have tended to be short-lived and difficult to time. Any investment in gold should be made in the context of your long-term goals and objectives, not due to any short-term market fluctuations. It's also helpful to remember that on an inflation-adjusted, annualized basis, stocks have actually outperformed gold by 6% a year since 1802. As such, stocks have been a far more reliable way to build wealth over the long term than any other asset class. So until next time, invest wisely and live richly.